Good morning and good evening, and welcome to our IIF webinar on the post-COVID world, the FinTech landscape. Once again, thanks for joining us, and most importantly, we hope that you're all continuing to stay safe and healthy. I'm Brad Carr, I'm the Managing Director of Digital Finance at the IIF, and I'm just going to make some very quick logistical announcements before I hand over to our moderator for today's session, Lawrence White. This is a public event and comments are considered on the record. We are recording and the video will be posted on the IIF website. If you're on a computer or a smart device, you can use the Q&A prompt button to be able to submit your questions through to Lawrence, and he'll try and work those into the conversation. Unfortunately, if you've joined by telephone, you'll only be able to listen and will not be able to submit questions. To today's session, and I'm very pleased to welcome Lawrence White in his first capacity on behalf of the IIF. Lawrence has recently joined us at the IIF in a consulting capacity for the moment, operating from his home in Melbourne, and he'll subsequently relocate to the IIF Singapore office and take up residence as our digital finance representative in Asia Pacific. Some of you will know Lawrence from his previous work at the Financial Stability Board in Basel, where he focused specifically on a number of the key digital finance topics. And indeed, some of us at the IIF had the experience of presenting to him on our work on cloud and machine learning, where he always scrutinised us very appropriately and thoroughly. He also worked at ASIC in the Australian Treasury and is also a registered barrister, and we're delighted to have him coming on board now as part of our team. Lawrence's appointment reaffirms the IIF's commitment to the Asia Pacific region and is really an opportunity for us to ensure that we're bringing the best know-how from the Asia Pacific region into our global thinking, and equally that we're sharing our know-how from other parts of the world back to the region. So I think that's enough from me. I'm going to turn the floor over now to Lawrence in Melbourne, and he's going to introduce the various team panel we have, joining us from Singapore, Hong Kong, Sydney, and the San Francisco Bay Area. Lawrence.
Thanks very much, Brad, and thanks everyone for joining us for today's webinar. We've got a very distinguished panel of speakers, as Brad has said, starting with Ayaz Kazi, who's the Chief Platform Officer at Banco Santander, based in California. Prior to joining Banco Santander, Ayaz acted as Platform Head for Google Cloud, and he was previously a long-serving executive at SAP or SAP. Jonathan Larson is Chief Innovation Officer at Ping An Group, the world's largest insurer, and Chairman and CEO of its Global Voyager Fund. Jonathan is based in Hong Kong and was previously Global Head, Retail Banking and Mortgages for Citi, as well as its Asia Pacific Head of Consumer Business. Sopnendu Mahanti is Chief FinTech Officer at the Monetary Authority of Singapore. Like Jonathan, he formerly held global and regional head roles at Citi, in his case as head of Citi's Global Consumer Lab Network and Programs, and as APAC Head of Branch and ATM Services. Deborah Yong is the CEO of the RegTech Association based in Sydney, Australia. Among numerous previous and other roles, she was General Manager, Influence, Leadership, Engagement and Diversity for the Australian Private Equity and Venture Capital Association for over 8 years. And she's an extremely energetic CEO of the RegTech Association. So turning to today's topics, digital finance and finance generally has entered uncharted waters in the pandemic crisis, of course. COVID-19 is accelerating digitalisation, while making access to finance for many fintechs and some financial institutions harder. Governments are ever more reliant on strong banks, but also on getting cash payments out to the whole community, including the unbanked, sometimes referred to as the last mile problem. At this crucial juncture, it's timely to reflect on immediate trends and the medium and longer term outlook. It's particularly timely to reflect on these trends as observed in the Asia Pacific region at a time when its increasing strength becomes apparent, as well as its diversity. I'll be asking questions under 4 topics and themes, and we'll try to leave roughly equal time for each theme, as well as for selected audience questions. I apologise in advance if we can't deal with all of your questions today. We'll wrap up with a look ahead to our forthcoming events with an Asia Pacific focus. So turning to the first theme, and this is what digital finance trends or developments are panelists observing or participating in right now of general interest. I'll turn first to Jonathan and ask a tailored question. How is an integrated digital finance and health services group such as Ping An reacting to and being affected by the COVID pandemic? For example, how are COVID tracing apps and other data-driven innovations changing the landscape? Jonathan?
Well, thank you, Lawrence. And I think it's probably worth pointing out that I think China is sort of coming out of this thing quite rapidly, and being an almost entirely China-based company, that's of course important for Ping An. So I think on balance, you'd have to say that China has handled this thing pretty well, and that proportional to the population, the impact, and I think the deaths in aggregate, it's a very large number. But it's below 5,000 people, and I think relative to the population, it's a relatively small impact compared to other countries that we've seen subsequently. And I think the second point to make, just as context here, is that I think we're seeing the China domestic economy start to snap back extremely quickly, and activity returned pretty much to normal. And I think that may be of relevance to other parts of the world as well. But of course, China is a production economy, and China as an economy won't recover until the demand economies of the world recover, particularly the United States and Europe. And obviously international travel and the re-establishment of proper international transport links as part of that. Ping An, as probably most folks know, is a highly digitally focused company and a highly technology focused company. And I think it's fair to say we went into this thing in a pretty good place. Virtually all of our customer journeys can be largely completed remotely and digitally, but it did affect our businesses in different ways. So, for example, we have a platform that some people might be aware of called Good Doctor, which is the largest telemedicine platform in the world. We have over 300 million users. And what that platform does is allow a patient or a consumer to access primary healthcare via a mobile phone platform. And the first layer of interaction is a triage process that's driven by AI. And then we have a large number of on-staff doctors that then interact with patients, either to complete the diagnosis and address their needs, or to refer them to other sources of healthcare. So that the demand for that business has just exploded in this context. I think the business went into COVID, very much ready to deal with the emerging set of needs. And I think that what we're seeing in that particular part of the health space is a pivot to digital. And I think we'll see in many parts of the world much of traditional offline healthcare reconfigured in a way that can be delivered, using mobile technology, using remote diagnostics or point of care diagnostics, and indeed treatment plans. So I think that's one example. Others would include our wealth management business, where we have a pretty well automated workflow for clients to invest, to reallocate portfolios, to manage cash, etc. And I think that business as well has sort of done pretty well through this process. Contrast that with other businesses like our life insurance business, where we use a huge amount of automation, but we have 1.3 million life agents, and life insurance is still very much a product that requires a face-to-face consultative interaction as part of the engagement process and the sales process. So that business has been severely affected. So I think but I think it's coming back quite well. And of course, the automated tools we have to sort of automate the workflow and client journey there are allowing us to minimize the impact versus what it might otherwise have been. I think Ping An has been very active in trying to take a broader role within China. We've certainly been working with the government and various levels of government to assist with testing. We've got some image-based testing tools that have allowed hospitals to increase their capacity to do lung scans, for example. And we have AI algorithms that can read the lesions that might occur for severe COVID patients, as an example. And we've had mobile units that we've been able to bring into particular geographies that have allowed the local hospitals to deal with the much larger workload that would otherwise come directly to them. So I think that's been helpful. Secondly, we've been working, you mentioned tracing, so the government indeed has a pretty sophisticated tracing program, which has been very, very effective in sort of tracking down if you have COVID, with whom have you been associating, and can we find those people and test them and get them isolated if indeed they are positive. I think that has been very successful in China. We've been helping the government to focus that program using pretty sophisticated disease forecasting algorithms. So this is a suite of capabilities that Ping An has built over the last few years, exactly with this kind of pandemic in mind. And I think that's been quite well recognized in China and quite significant. On top of that, I think we've tried to make sure that we've got really our internal processes as sort of digitally focused as possible. We got 400,000 staff members working from home off the bat. We have a proprietary internal communications platform called Happy Ping An, which has Zoom-like video conferencing, which has a lot of workflow and control tools built into it, in addition to secure email and other communication channels. So some of that is that we were able to operate pretty much BAU. We're now at a point where people are pretty much back to work. I think for every business, though, Lawrence, that I guess the new reality of, or this hopefully temporary reality of dealing with COVID has probably highlighted the remaining gaps in digital processes. And I suspect that most large institutions are intensely focused on plugging those gaps. And I think that will be one of the consequences of the experience we're all going through or have been through.
Thanks very much, and we'll deal with digital trust and ID later in the program. Thanks, Jonathan. Ayaz, can I throw to you? What's happening with small business as you see it, and how is Banco Santander trying to help some of its partners and small business through this crisis?
Thank you for having me here, and hope everyone's staying safe. Where we're seeing small business, I mean, we've seen that in the previous IIF webinar for those who were in that contactless payment, cashless payment. We are looking at ways that we can find ways to do remote work, find ways for SMEs to come back to business and first of all, stay afloat, then find ways to thrive and prosper. These are common themes that we are seeing across all of these things. What we are doing, I mean, I'm really, in some ways, to see a large bank put so much effort worldwide behind providing care for its SME customers and individual customers has been very, very heartwarming in a way to see it and to be part of that process. So over April and May, we've delivered 1.1 billion in loans every day worldwide. Right? And that's not a number to scoff at. That's a pretty significant number that we've brought to the market. And brought to our SME customers and individuals. We also have done the right thing, making sure we got payment deferrals in place, making sure suppliers were paid on time, making sure we gave advanced pension payments to retirees. All of these things that you would expect that you want us to take care of the community, of your customers and your partners. I think making sure that we got that out in time for it to be effective, including things like providing COVID insurance. We have, in all the countries that we operate in, we have COVID sites or COVID-related resource sites under the Overcome Together banner, if you will. And we've also offered university students, so not just the SMEs and in that, but also our university students, scholarships with the Stay Home Scholarship banner. And recently we launched, through our universities group, we've launched a program, a challenge for startups and fintechs and whoever else wants to participate to come in along 4 tracks and provide new solutions for the COVID impact. And it's an accelerator style where you can come in and provide these capabilities, and we will vet these solutions and then look at ways we can provide value to these solutions as well. So this is in addition to participating in the EU versus hackathon, the EU versus virus hackathon that just recently happened, and we had 3 winners out of there from the area that we sponsored, which included how do you open restaurants back easily, how do you manage travel in the future, and amongst other things, right? And those were some of the winners. Internally, I think we are also providing employee stability. That's a key aspect of what we are bringing to our employee base, making sure that we made sure that the top management is the one that took the pay cuts, and this has been publicized, and we made sure that there were no layoffs and during the COVID crisis, and also making sure that we could bring in our employees as they start going back to work. We've got an app that helps deliver back to work in a seamless fashion, where they have to go through, depending on the country they're in, they have to go through some testing. And this is what we are doing in Spain, and bringing our employees back to work with using a back to work app as well. So in addition to having provided an app for the countries, so Mexico has a COVID app that we have provided, that is the standard app for Mexico as a country. And amongst the others, we've made this available to the other countries. We've worked with multiple governments, as Jonathan talked about, well, globally across the board. So this is, I think, we've not seen something like this before. And I think we've done all that we can, and we continue to do more. That's where I'm seeing things.
Thanks so much, Ayaz. Swapnendo, if I can throw to you in terms of what are you seeing right now, particularly in terms of supply and demand trends or drivers for B2C and B2B fintechs?
Thanks for having me. Let me start saying that the way we see this space of fintech in 2 groups. There's a B2C fintech and a B2B fintech. B2C fintechs are fintechs who are in the business of providing financial services, regulated or loosely regulated, and the B2B fintechs are those which are in the business of helping financial institutions to digitize more. Now, both have a moment of their life, because the demand for the services for both the parties have gone through the roof. That's what we're seeing in Asia. B2C, we see more people going to the platform, trying to get loans out of those platforms, but the supply is hit because the investors, or the individual investors who are putting money in the platform, they're holding back, they have to conserve cash. So we see a huge supply-demand gap in the B2C platforms, especially the P2P lenders. On the B2B side, which is the companies who are trying to digitize financial services, this is the time. In fact, they are in the best moment of their life. They are getting huge demand. In fact, every financial services, they all know that when COVID-19 gets into the recovery mode, there'll be a huge demand for their services. There'll be a huge need to digitize faster. I doubt large tech company can respond in an agile way as the fintechs can. So the fintech's ability to go and plug in quickly to the financial services trying to digitize faster is the best opportunity for them to go and engage. So B2B, huge rise, and they're going to continue to see a huge demand. If I look at the numbers, the investment numbers for the last 4 months, and out of Singapore, it has crossed more than $300 million. A large portion of the money has gone to the B2B fintech. So the investors are also having high confidence on this category of fintechs. So great time. And I tell all the fintechs, this is your chance. Take the best advantage of the situation and go and get all of us digitized.
Great. Thanks so much. If I could throw to Deborah, are you seeing this uptick in demand and for RegTech in particular, and how does it play out across your membership?
Yes, so definitely. Thanks very much for having me too. And can I just say it's fantastic to see us come together as a global community to collaborate like this, and having such an authentic conversation as we're beaming in all around the world into our homes. Swapnendo, that was a great thing that you just said. I wrote it down, the best moment of your life. and that seems to be the way for RegTech, certainly right now. I mean, there's no denying that I think that any small business, startup, scale up will be challenged right now with what's happening in the world. And while governments have sought to support early stage companies through various stimulus packages and so on and so forth, there will be some challenges, in particular around clients delaying POCs and trials and things of that nature. But just to support what Subnendu was just saying, I think on the flip side is that RegTech companies by their nature are small and nimble and can react quickly. So this should represent, a great time in their life. And for those of you that are not aware, our organisation has 150 organisational members, and of which 100 of those are RegTech companies.
We'll change gears. So I'd like to wrap themes 2 and 3 together, if that's okay. So theme 2 is, how do you see the competitive landscape evolving, particularly with respect to the emerging debates around big tech in finance and the availability of finance for SMEs? The third theme is, what are the likely future impacts on FI? So really medium term and then longer term perspectives. If I can start with you, Swapnendu, perhaps you could start by talking about the MAS support package for fintechs, but then evolve to or discuss also how you think both Singapore and global landscape for fintech will change over the medium to longer term. And also I'd like you to comment briefly on Temasek's joining the Libra consortium. Thank you.
Okay, a long set of questions, so I have to keep track of it. So let me start with the package question. At the onset of the COVID-19, we introduced a COVID-19 rescue package, which was primarily targeted to fintechs. Of course, my other colleagues in other agencies did similar for their own constituents. Talking about the package here, there are 3 issues we observed in the market the moment COVID-19 hit all of us. First was the workflow, the challenge on the cash flow side, working capital side. Second, there were challenge to do the same sales process they're used to. And the third was the investors at the start of COVID-19 held back to the commitment to the investment they're supposed to make as part of their program. So to deal with this situation, we introduced 3 incentives. On the cash flow support, we looked at how to subsidize and offset the salary expenses. We introduced something interesting, which I would like to share today, is that we linked this salary subsidy to training plans. If you have read the recent article by Dr. Raghuram Rajan, he talks about that during COVID-19, grants can create a lot of zombie companies, and people in coma can come out after COVID-19 and start delivering business. So what we did is that we introduced the salary subsidy program linked to training, which means if during my work from home, I work for a startup, if I go and spend an hour on online training, I get $15 salary subsidy. So what we wanted to ensure, while we are providing salary subsidies, we are upskilling these people. So when things are back to normal, they are upskilled to deal with the challenge. On the sales side, luckily we had a platform which also saw the moment of time, what we call as API exchange platform. And this platform was designed to facilitate a remote engagement between fintechs and the banks. So what we did, we offered this platform free to all the fintechs based out of Singapore. And so they could get into this platform and work with the clients remotely by building prototypes, POCs, and doing the sales process. On top of that, we created a grant which says that if you find a client and the client is willing to take your services, we pay $120,000 worth of subsidy to that. And back to Dr. Raghuram Rajan's paper, one of the policy mistake we can make by providing grant during crisis, you may actually funding value depleting companies which will be irrelevant when things go back to normal. So by putting this filter, we ensured that they're doing real sales and they're selling product which will be relevant post-COVID-19 also. The third aspect of investors' support, we created a solidarity fund where we committed to put some money behind investors willing to provide short-term liquidity to these fintech firms, anything between half a million dollar to $1 million, because we know that most of these companies will have the next 6 to 9 months of cash flow challenges. Investors will be a little nervous. I think if government can come and pair with investors to provide liquidity, short-term debt, convertible debt, I think they will get over this challenge during this crisis. So these are the packages. This is what we did during this crisis. It has worked extremely well for us, and we hope to see this helping us to get over this crisis.
Yep.
The second question, quickly on the Libra question. This is the most popular question I'm getting for last 2-3 weeks, given Temasek put money behind Libra. Now, while not going into detail, there's one thing why I think Temasek has gone there, because they have been working with us, when I say in Singapore, MAS and other industry, on a project called Project Ubin. And that Ubin project is designed to think about future platforms using DLT and tokenized asset as a new way of doing cross-border payments or exchanging assets. And I guess because they're involved in that infrastructure build-up, I think they're looking at how they can participate if Libra plays a significant role in this market, especially Asia, where there's a huge Facebook community. Libra can be part of that narrative. If that happens and there's need for a platform, this is where the meeting of opportunity comes. So I think that's my best educated guess, but I think Temasek would have made a choice for something else.
Okay.
What is the third question?
We do have an audience question for you, actually. On a scale of 1 to 10, how would you rate B2C FinTech's response to the crisis? Have they underwhelmed, or is this what we should expect at the current level of maturity?
Okay, I can answer the question in 3 parts. Of course, they're extremely overwhelmed, I'll say, by the demand side, and also they're also seeing some debt defaults. Because we expect during crisis this to happen. I think what is happening for them is they feel little, I'd say they feel little left out, because most of the policy support across the world has gone for the banks during crisis. And my argument has been that if banks didn't know how to lend before crisis to this segment, what makes us believe they'll lend better in crisis? So because they had the tools to lend before the crisis to this segment of people, they felt they need more support during this crisis to lend the segment of people who are in deeper crisis now. So that's a bit of issues out there in the market in this space. But generally speaking, especially from Singapore, we are doing a lot to help them to find the supply side as much as we can.
Great.
Maybe I can provide an alternate view which ties together your previous point of why enterprise startups are getting, or B2B startups are getting funded, but B2C startups are not getting funded as much, or getting questioned, or seeing a slowdown. I think it all ties back to what do the end consumers trust. It has nothing to do with what is the size of the organization, etc. Trust is become a major factor here, and that digital trust, if you will, as it needs to be established, an ID and all of that from our side. If you flip it to the consumer, it's where would they rather keep their money? At this point, while it was nice for them to test out the services and customer journeys they got from some of the startups, only the value ones, and clearly the big value ones will come through. There's a lovely article today in the Forbes, if you see, which talks about the halo effect of fintechs and how that the crisis is called that in question. And I think it's a wonderful read if you spend time, but I think it comes back to what do the consumers eventually trust? And I think that's where I know we will go there with the digital ID question, and then talk to that from our perspective, from what we see for as it changes here.
I was going to actually throw to you on this particular topic of medium-term trends. How do you see the evolving conversation between banks and VCs headed? And also, how is Banco Santander seeking to respond to the competitive threat from big techs in finance?
That's actually, these are 2 different questions. The second one is actually has always been there, pre and post COVID, right? The question is, did COVID make any real difference to that. I think that exists. It's going to be a cooperation with big tech, the way we look at it, and where it's needed. If I look at, again, going back to the point of, we have as much customer data or perhaps more than most of the big techs, right? In terms of the actual, I can actually get to the point where I can define propensity to pay or how much somebody might pay for a service, which is better than having 25 anonymous accounts on one person.
Yeah.
Right? If I look at it in terms of the comparison to a big tech. So we've got deeper data, and we recognize that we are at a higher level of trust with our consumers, and even that has now come into even more so into the spotlight with this crisis, right? That they trust us a lot more with the stuff that matters to them.
Okay.
That's we are the ones they're turning to. So from a competition perspective, I don't expect anything to change. But if I was a fintech, right, at this point, I'd be either leaning on Big Brother, which is my big tech, or looking to a bank very quickly, as Supendra pointed out, for selling my digitization services, right? But I have only two choices very much at this point, and I'd be feeling the heat, because I've got to align very quickly with one of these two. And clearly the big tech will acquire a few, the bank will acquire a few, given where things are at. But the quality ones will fly through this things, but there will be a lot of shakeout. So I would say this is more of a question for fintech than for the banks, because the bank big tech challenge was there before, continues to be there through this as well.
Thanks very much. Deborah, could I ask you about your sort of, let's say, perspective on the next period, medium and longer term? Around innovation in RegTech, where do you see innovation as most apparent, and what are jurisdictions that are getting this right have in common in your view?
Yeah, look, the real innovation is in the speed and efficiency and the restoration of trust, which we've just been hearing about, that can be gained through RegTech. Having machine learning and artificial intelligence perform the lower level tasks and have humans on the higher order, more impactful tasks, if you like, that facilitate that safer environment and a more efficient and productive environment for everyone is key. If I was to use an example of customer onboarding, we've got a case study that says, as an example, that customer onboarding times have been cut by 50% in using good RegTech as an example. So I think the real innovation is just coming from the transparency and the speed and efficiency. And then what do the global leaders have in common? I think what they have in common is this robust regulatory environment is what we all have in common. And I think that's why Australia has actually shone in terms of RegTech product development. Back in 2018, the Boston Consulting Group did a piece of research, and Australia was positioned equal third in the world behind the US and UK in terms of the breadth and depth of the RegTech product development. So if you kind of look at our population compared to those, we're punching way above our weight. And in one sense, my association has only just begun to scratch the surface of how many RegTech firms there are in the world. But really, Australia has been able to leverage from this robust regulatory landscape, if you like, to create what we set out to do by forming the association, and that was to create a global centre of excellence and do what we can to accelerate adoption.
And I guess in terms of the medium term to longer term environment, do you have views you want to share on that particular question?
Well, I think what's really interesting and what's emerging is back in the early days when we first set the association up, the breadth of RegTech providers tended to be congregated around mostly banks as a customer. But what we are going to see over the medium and in fact long term is that many RegTech solutions can actually be applied outside of financial services. So this gives this a very interesting economic lens. When you consider such things as health services and real estate and agriculture, telco. So all of these other heavily regulated industries can also benefit from RegTech. So I'm thinking that over the medium to longer term, one of the other things that we'll see too is probably government as a significant buyer of RegTech going forward. And certainly our experience in Australia over the last little while has seen the government, fast track procurement and all kinds of things, to get COVID solutions to the market, quickly during the pandemic. So I think we will see government come out significantly as a buyer.
Thank you. So if I can turn to you, Jonathan, is the pandemic accelerating digital innovation of Ping An's offering? You talked about the digital gaps before, which I thought was a nice phrase. Could you sort of share what you're willing to share, I guess, around how Ping An is seeking to plug those digital gaps? And also perhaps talk about your investment portfolio and what's going on with your investment strategies at the time being, for the time being.
Totally happy to deal with those two things. So, look, I think we're in a fortunate position that many or most of our processes were architected sort of end-to-end digital, but every single company is sort of realizing that there's some set of services where you have to call the call center, or heaven forbid you have to actually send or receive a fax. I don't know about you guys. I got my fax machine about 20 years ago at home, and I occasionally get financial institutions asking me to send a fax, which is bizarre. But, I think this is common for everybody. At Ping An, we're in pretty good shape. And the way, one of the ways we've operationalized this, I think might be interesting, is that in Ping An Bank, as an example, which is it's a pretty sizable bank, it's a $500 billion US bank plus. We have about 54 million credit card customers. It's a pretty sizable operation. We've got a gentleman called Frank Tsai who runs the retail bank there. And Frank's background wasn't in banking at all. He was the chief architect over at eBay for about 10 years in San Francisco. And the way he's organized, and it's sort of a template for how we're organizing the broader organization at Ping An, is to create a DevOps group attached to literally every product group. And so if you're a manager in the bank, you have your DevOps team literally within 10, 15 feet of you, exactly like an internet company. And we've tried to architect our sort of API infrastructure such that each of those teams is autonomous and can release code at will in many times, multiple times per day. And so moving to really gearing up that organizational model as an enabler for the next level of digitization is what we're about. It's interesting, getting to first level digitization so your customers don't have to walk into the branch or call the call center is one thing. All that does is remove friction. It doesn't fundamentally change the competitiveness of your value proposition or the way in which you engage with customers. So it's on those next level issues that we're primarily focused right now. And I think that DevOps model is probably a template that, over time, as banks are able to either create separation layers between their legacy technology and their front-end customer technology, or for those lucky enough to be able to junk their legacy technology and move to a contemporary infrastructure, that paradigm, I think, is going to be really fundamentally important. Flipping to the portfolio question, so obviously the whole question about what's happening in the entrepreneurial FinTech and digital health space is highly germane to us. So far in our portfolio, we have just about $300 million of investments committed. In fact, we just closed a transaction with a German teleorthodontics company yesterday for a 20 million euro investment. So I think the first comment, just to echo maybe some of the comments that have been made, there's going to be massive fallout at the sort of the bottom layer of the pyramid amongst the 7,500 roughly fintechs that exist in the world and health companies. The key variable is, do you have enough cash to survive through this pressure period? And companies need to have 18, 24 months of cash burn on hand to be able to do that reliably. If you are lucky enough to raise, if you're pre-revenue or still burning a decent amount of cash, if you were lucky enough to raise before February, good luck to you. If you weren't, it's really, really difficult. We subscribe to the idea that most of the action is in the B2B space. There are actually very few direct-to-consumer models in the last decade that have scaled. There are a few really impressive ones, like PayPal, I think, would be a really great example. Over 20 years, Credit Karma would be another in the sort of intermediary credit space in the United States, of course, which has just been acquired by Intuit. But for the most part, it's very, very difficult for entrepreneurial firms in finance competing against a regulated oligopoly in most cases to be able to weather the customer acquisition costs to build a really sizable franchise. There are a lot of other constraints we don't have time to get into, but just one last point. I think on the B2B, we see an enormous opportunity. It will be accelerated by the COVID experience, but it's worth just bearing in mind that you have to be enterprise grade to be credible and usable by big banks. That implies a certain vintage. It implies a certain scale. Also, the procurement process to actually get in the door at Ping An, at Santander, at Citi, at an Australian bank, it's a long process and it's a very demanding process. So there's going to be an easy flip for those enterprise companies that were struggling suddenly to get into the door. It's still, only the fittest will survive in that space as well.
That's well said. Actually, I do want to make one quick point on that. That Nendo made it, or Brad said earlier. I have not seen so much move so quickly in terms of cutting through process to get COVID-related initiatives out there. I've seen this bank move at the FinTech pace, which is pretty impressive to see, and even procurement, Jonathan, to your part.
Thank you.
Just a quick supplement response to Jonathan. One of the policy action we took during COVID-19 is to set up a process on one of our platform where the fintechs can go through that certification process, which regulators mandate to the banks as part of the procurement guidelines. And that has helped a lot because these companies suddenly know what they're missing. And I think that is helping them to fight back this challenge of procurement challenge, especially from regulated banks.
Thanks very much. While we've got you on camera, Swapnendu, can I just ask you briefly about how the Singapore FinTech Festival might look in 2020, given it's such an exceptional year?
I will say this will, in fact, we're working on a model which will be much bigger than last year, that much I can say. But it will be a complete different model, not pure online, but is that we are planning to do it in some 20 cities simultaneously, using a combination of technology, online and physical presence. So watch out for that in next month or so. It will be a very different model, and I'm happy that COVID-19 forced us to look at that model because we are running out of capacity in Singapore.
So no ocean liner for this year. Okay. So look, let's pivot to talk about digital ID and digital trust. Clearly, this is one of the missing pieces in a seamless financial landscape for a whole range of financial services and indeed real estate transactions. So what are the building blocks around identity and trust that the public and or private sectors will be called on to put in place to realise the FinTech promise of greater efficiency and greater financial inclusion? And obviously some of the things we're seeing are the BIS setting up its innovation hubs in Singapore, Hong Kong, Switzerland. The Singapore hub will focus on digital ID. Banco Santander is also pushing digital trust and digital ID issues putting them in focus. So if I can first start with you, Ayaz, and just noting the time, we've got only a quarter of an hour left and I need to wrap up. So some are suggesting a critical role for digital identity as we come out of this crisis. How do you see digital identity being related to digital trust? And how do you bring on people who don't have digital ID?
So if you get beyond the initial SMEs need to survive, thrive, We need to go back to remote working, figure out remote working and contactless payments. And the next thing that shows up is, okay, to do this right, you need to be able to verify and identify people. That's your digital ID. But that's not enough. That tells you just one piece of the puzzle. Question is, how do you know you can do repeatable business with this person or company? And what is their, if effectively in some ways, the risk score? What is the trust score? And so the ability to look at someone and interact with someone and have the confidence and have the trust that they can deliver what they say they deliver. This not only that they are who they say they are, but they can deliver what they say they deliver when they said they would deliver it. Not only that, as an individual or a company, I now can be in control of my data. That's an important aspect of the data. Privacy is an important aspect of digital trust, where I only share what is needed for getting my transaction or getting my interaction done. And so there's no doubt in my mind that digital trust and digital ID are going to be one of the key areas of huge technology investment. And because we have now brought that forward, it brings a new problem that I think most of us it has been latent. We are addressing that problem in the Latin America space where we have a solution for the unbanked. But if you think of people who don't have an ID, or cannot establish an ID, undocumented workers, etc., how do you manage for that? And that's a problem that now that digital ID becomes key and everybody will make sure solutions are all tied into digital ID and trust, you're going to have to start thinking about all the people that might start to get left behind and how do you bring them in. So we have something in LATAM right now for the unbanked called Super Digital, and we're working with the local OXXOs of the world with something called Super Red for loyalty program. But that's an example of the type of things that you bring the end customer who may not have documentation, and how do they partake in the economy. And given everything has gone digital, right, you assume because of COVID now there's a fast acceleration to digital, and it might not be that easy for people to do cash transactions anymore. So, yeah.
Okay, thank you. Swapnendu, what role in your mind will MAS and also the BIS Innovation Hub in Singapore, what roles are they expected to play in establishing public goods around ID and trust? And I guess a question for perhaps the others is what is the role of the private sector in delivering that trust? Swapnendu?
Yes, let me maybe my answer will upset few people. That in crisis like this, what we have seen that not having a national infrastructure for identity, payment services, data services, clear digital consent services is impacting the COVID-19 response. Absolutely no private enterprise can deliver identity payment services at this scale to the bottom of the pyramid. Impossible. The countries which have successfully responded to COVID-19 are the countries where the bottom of the pyramid has a trusted identity program. Great example is India and other markets where people are able to reach out to the bottom of the pyramid using identity as a platform, as a national utility, as a public good. So that's clearly evident from this crisis. The other example I would like to bring is there's a beautiful article about, big part of COVID-19 was the great migration from urban cities to the villages. Because people were locked down, they were forced to get out of the urban city, go back to the home because they had no space to survive in big cities. And the reason being that because most of the working or below a certain working population don't have a structured savings program. And what was required was a long-term thinking about pension system. And most of the pension system required a national infrastructure like identity, payment services, data, so you can start delivering this product. Now, if you want to recover post-COVID-19, how do you deliver a pension system which will protect these people from the next crisis? You need a national infrastructure at the scale of as a public good. So having a public good strategy will be the driver for every country if they want to recover the post-COVID-19 situation. Because if they don't have it, I can think for any strong reason how can a private sector, highly fragmented, trying to manage this process. Unless in China, you have a large dominant corporate who can manage this process. So big bet on public infrastructure, BIS Hub is working with us in this space. I think having central bank backing it is a big deal. Just to close my point, if you look at the biggest consumer of national infrastructure for IT, payment services, data are the financial sector. If the regulators who are driving the biggest adoption can get it right, the rest of the sectors will follow.
Okay, thank you. Perhaps Deborah and Jonathan, in roughly 5 minutes to share between you. So Deborah, what's the particular focus that RegTech providers can bring to the digital trust and digital ID debates?
Yeah, so on digital trust, I think if we take this back to consumers, I mean, they expect safety, privacy, and efficiency in this world that we're living in. And the good news is, I guess, that RegTech was kind of born to deliver to those things. It's at its core. And some of the earlier points, it may surprise some people to know that, RegTech does cover the more traditional things like financial crime and know your customer. But there's a growing demand for things like marketing and product compliance, conduct and culture risk assessment, responsible lending, privacy and consent. There's voice data analytics solutions, financial advice, cyber compliance training, and so the list goes on, and that's not all of them. So it's really, really a wide thing underpinning this whole idea of digital trust. And on the digital ID, I mean, certainly digital ID is a growth area for our association. We have a number of members who have solutions in this area, things like facial recognition, and then various biometrics that deal with voice and facial, and various other data sources, as well as video ID, just to name a few. And in Australia, the federal government are introducing something called GovPass, which is going to be managed by our Digital Transformation Agency. And that's going to be an all-of-government way of verifying identity. And then they are also hoping to commercialise that across the private sector. And I think that this will enhance confidence in platforms like this. And I think that we will see some growth in digital ID, both in terms of the number of members that we probably have, as well as the number of customers.
Fantastic. Just briefly, Jonathan, if you can wrap up with what Ping An is contributing in the space of digital ID and digital trust.
Yeah, thank you. Well, first of all, our first sort of foray into AI as a company about 4.5 years ago was building our own facial recognition. So we were actually re-architecting our direct personal lending business, and we wanted a completely frictionless process. And we found that in China, we could use facial recognition from a mobile and then match the image against a reference image in the government ID photo database via API. And that's something, so we've now done billions of authentications like that. It gives us something like a 99.8% accuracy given the resolution of those images. And so in effect, that plus a few other variables that we're able to use more or less eliminates identity fraud in China, which is a huge deal. So that's one. We've built our own voice print recognition. Many of the commercial solutions in the market are one-to-one, so you have to key in a number, an identity number, and then have your voice profile matched. Ours can actually go and search, and so you can just say something and we can find you immediately and identify you. So that's really quite powerful as an enabler. And we also have done a lot of work on trustless solutions in various different contexts, both individual and corporate. I think the role of regulators is important, but I think it's going to be a very different answer by country. Those of us that are Australians on this call will recall the referendum, I think it was in the 90s, where Australia decided not to have a national ID system. If that's your starting point, it's a very different problem from the remarkable success that India has achieved that Sopnendu alluded to, and the process by which they have introduced essentially a biometric identification system covering the whole country that supports payments and access to the financial system is quite unique. If you're solving that type of problem, obviously you need that kind of consensus and regulatory enablement. I think in developed countries, probably there's a very different set of requirements as well, which is that people don't want to have to repeat their information to every provider. And I think over time there will be a role for a personal vault that is sort of secure to you, and where information can be shared on an either trusted or trustless basis. I suspect that there's an important role for the private sector there alongside whatever regulatory framework might emerge.
Thank you. I think in answering my question, you've answered one of the audience questions about how transferable is the Chinese experience. And I've got another question from the audience as well on will governments and big tech working together on COVID tracing apps end up controlling or defining digital ID? Perhaps if I can ask one person to answer that in 1 minute. Sorry about that.
Yeah, I just, from the China experience, I wouldn't confuse, the very pragmatic desire to facilitate contact tracing, whether it's electronic or whether it's simply by asking somebody, whom they've been in touch with the explicit and limited intent of simply finding those people and getting them tested, and if indeed they're positive, getting them isolated. I wouldn't confuse that with the broader discussion of state surveillance and so forth. I think they're two quite independent things, and I don't think they're converging at all. I think that the government's doing contact tracing and doing it for a very specific purpose to save lives, would be my estimate.
Thanks so much. All right, well, we've run out of time, so I'll just wrap up briefly if I could. I hope you'll all agree that today's discussion was lively and topical. Some of the key points that jumped out at me were Jonathan mentioning the pivot to digital in health, but obviously we're seeing it much more broadly. Sopnendu saying it's never been a better time really for B2B fintechs. Ayaz's point, or statistic, that Santander has been lending 1.1 billion per day over the last 3 months did strike me. And also the work they've been doing through LATAM on tracing apps and digital ID. And Deborah's point that the regulatory environment is key to fintech success, and that those countries that get the regulation right will see a thriving sector. So I want to close with a quick forward look to some forthcoming events for you. These events are scheduled at times that work well both for the West Coast of the US and Asian and Australian time zones. So truly Asia Pacific in that sense. In the first week of June, we'll release a podcast interview between Tim Adams, our CEO, and Ravi Menon, the Managing Director of the Monetary Authority of Singapore. On June 8th and 9th, we'll hold a webinar called Realising the Digital Promise, where we will discuss and unpack the work of the IIF and Deloitte on digital transformation. We have an Asia update call on June 18th, and then 2 further webinars at APAC Friendly Times in late June and July. One on the digital currency future, which will be a fascinating look at digital money, and a look forward also to the US election. So in closing, I'd like to thank on behalf of the IIF, all of today's panelists, and also all of you for tuning in and giving up all of your valuable time to help us understand these issues better. And we look forward to you joining us again in the very near future. Thank you. Have a good afternoon, good evening, and good morning.